everyone, welcome back to the channel. If you're like me, you watch the stock market pretty closely and it'd be hard not to have noticed the market has been going down this week. Just yesterday, the Wall Street Journal was reporting the NASDAQ has had its worst day since 2022. The article goes on to state, the thrashing left the S&P 500 2.3% lower, its worst day since December of 2022. The Dow Jones Industrial Average lost 1.2%, and the tech-heavy NASDAQ 3.6% decline was its largest skid since October of 2022. So what the heck's going on? Well, it started Tuesday after market close with none other than my favorite company, Tesla, in their earnings report. Tesla shares closed down 12% the following day after an earnings miss, which is their biggest slump since 2020, and the majority of the Magnificent Seven followed in Tesla's footsteps. The Magnificent Seven, made up of Microsoft, Amazon, Meta, Apple, Alphabet, Nvidia, and Tesla, lost a combined $768 billion in market cap the following day. This represents the single biggest wipeout of market cap for this group of stocks since Meta went public in 2012, according to the Wall Street Journal. It hasn't been all bad news though. The sell-off appears to have actually stopped on Thursday today for the most part. The S&P only closed down 0.5%. It was reported that economic growth was actually quicker than expected, with second quarter GDP coming in at 2.8% versus expectations of 2.1%. So this appears to have helped ease the market for now. The big question, I think, is the temporary relief. Is this temporary relief, or will we see another big movement down in the weeks to come? The main things that I will personally be keeping an eye out on in the coming weeks are Apple's earnings, which come out on August 1st, Meta's earnings on July 31st, Microsoft earnings on July 30th, and Amazon earnings on August 1st. Later in August, we'll actually still see Nvidia's earnings. It's estimated to be August 28th, but they haven't confirmed the date yet. I expect until we see these earnings in the middle of next week, the market will actually remain pretty calm for the most part. But I fully expect a lot of movement if any of these firms start to perform significantly above or below expectations. In my opinion, the market is seeing the softening of Tesla earnings as a signal that the broader market and consumer spending is decreasing. Sort of at odds though with that GDP growing with what we saw above. But this could be signaling a shift away from luxury and discretionary spending. Apple and Amazon earnings will definitely really help finish painting this economic picture, I believe. If consumer discretionary spending is falling, then I fully expect both Apple and Amazon non-AWS revenue to be flat or declining year over year. If this occurs, I fully expect there to be another large sell-off, especially within tech. And then the market will sort of be in limbo until we see Nvidia to see if AI can keep the market propped up or not. If Nvidia starts to see softening, then that could highlight a slowdown in spending by large corporations, maybe hinting at broader economic issues and softening revenues that are not yet displayed in their most recent earnings. I personally think Nvidia will actually somehow outperform and be fine, as it feels like almost every tech CFO has said that they will be spending their money on AI capabilities. It will probably be a bumpy month, plus as we see how everything shakes out in the market with earnings coming. If you are the opinion that tech might start to bring the market down, then it might be a good time to rotate out of tech. So where are some good places to invest? So far in the second half of 2024, we actually see healthcare, consumer staples, utilities, and REITs are trading near 52-week highs. They are some pretty defensive stocks in the sense that they perform well in bad times for the most part, especially utilities and consumer staples. Think of firms like Coca-Cola, Procter & Gamble, Walmart, Unilever, Costco, the firms that are selling everyday items that you will purchase. Regardless of the economic conditions, you're still going to need to purchase those things. Same with utilities. Unfortunately, you have to pay electricity and water every month to receive those services. So any utilities tend to do better in bad economic times as well. This is very unlike Apple and Tesla, which are very much luxury purchases that consumers flock to in good times. So maybe it could be a good time to rotate out of tech completely. I personally won't be updating my portfolio at this time. I feel like I have a good mix between both defensive and growth stocks that I have a multi-year thesis on. So I'm not planning to make any adjustments as of now. If you're curious about my most recent portfolio holdings, I do have a few videos on the channel covering them, but I'm invested in Meta, ConAgra, Disney, Verizon, Intel, and Pfizer. Anyways, that's all I had for today. Just a quick video on my thoughts about the recent market and maybe some stock rotation changes that could be coming in. So if you're worried about the broader tech sell-off, then maybe it is time to rotate out of tech stocks. But anyways, thanks for watching. Leave any questions or comments below and let me know if kind of the more relevant current topics is something that interests you on this channel. Thanks so much.